What is going on, guys? Welcome back to another market update. By the way, Happy New Year to everybody. Let's hope that this year will be a little bit more bullish than the previous one because technically speaking, when looking at the yearly candles, look what Bitcoin did over here. We actually closed reds, which is pretty crazy because typically speaking, Bitcoin has 3 green candles before we get a red one. But this market cycle is already proving to be a little bit different. At the same time, we have to face the reality of the situation because technically speaking, in this point of the cycle, we should be heading down because that's what Bitcoin has done every 4-year cycle so far. So in a nutshell, we have people broken into 2 main camps. The first camp of people believe that the trend of 4-year cycles is still holding strong and Bitcoin has yet to prove that we have violated it. And the other camp believes that we no longer follow 4-year cycles, or at least not so precisely. In this case, bulls are the one who have to do the proving that the 4-year cycles are over because timing-wise, everything looks quite nice, as you can see. It's just that the magnitude of the bull market itself was very disappointing. Yearly openings are quite often pivotal moments, as you can see, so we'll have to see whether this yearly opening will at least give us some sort of pivot over here before having a continued move to the downside, or whether we'll actually go to new highs. And this is a chart I've shown before. It's another way of visualizing the importance of the yearly opening candles. They typically prove to be quite important support and resistance areas. When we zoom in, we can see that Bitcoin has actually been doing pretty much exactly what we expected. We were expecting this double bottom formation to form here to at least retest the 100 to 110k region. And Bitcoin finally is starting to move in the direction we were hoping for. As of right now, Bitcoin is again facing this very important resistance area, which was very good support in this zone over here, and resistance over here again, and support over here. So it makes sense that this is the most vital resistance area that we have to crush here before moving to these higher levels. Next, let's look at our other charts and indicators to find some more clarity. So we actually started this pump yesterday on a Sunday, so I was a little bit cautious. I wanted to see whether Bitcoin will actually continue this pump on a Monday or not. As of right now, the price action still looks quite strong, even though of course it's possible that we may come back down and fill this CME gap here, only to create some sort of larger macro ascending triangle here, but we'll have to see because Bitcoin could obviously just wait for a long time and fill this gap later in the next bear market as well. So we'll just have to see what Bitcoin decides to do over here. The gap looks a lot cleaner here on the 4-hourly chart, but the 4-hourly chart is nowhere near as important as the daily chart. Next, let's look at the DXY versus Bitcoin, and as you can see, the dollar has been doing exactly what we've been expecting. It has been dropping over here while Bitcoin has actually started to recover here. So hopefully this marks a new pivot in the trend over here where Bitcoin will actually go to at least some important resistance areas, if not new highs, while the dollar keeps dropping to new lows over here. When looking at the unemployment rate, you can see that it's actually starting to accelerate to the upside here, which is also putting some downwards pressure on the dollar because the Fed is kind of forced to lower the interest rates to stabilize the economy. As you can see, the effective federal funds rate is coming down quite rapidly over here. And the question is whether we will actually manage to avoid a recession, which has typically happened during these aggressive rate cut cycles. As of right now, the economy is actually looking pretty strong, even though we do have a rising unemployment rate because the initial jobless claims are still relatively low. We do still have to remain cautious, however. Next, let's look at one of my favorite charts here, which is the BTC USD longs on Bitfinex. And why is it one of my favorite charts? Because it is pretty damn accurate for predicting local bottoms, as you can see. These previous bottoms here were marked by tops in the longs. So we are getting another top right now, which should at least indicate that we're going to get some sort of local bottom over here. But there are a few instances where the longs messed up. The most obvious example is this peak over here before the COVID dump. As you can see, longs were very elevated at that point as well. And when looking at the previous bear market, you can see that longs were also starting to increase over here before we actually had our massive dump to the downside, even though they peaked right at the bear market bottom over here. So it's just difficult to also gauge where the actual peak will be. Bitcoin could do something similar. If we dropped over here, longs could go even higher, right? So it's not perfect, even though I would say it has like an 80% success rate. Next, let's look at the news, and you guys know I had to find some way of incorporating Maduro's fall into a Bitcoin-related TA video. So here's what I found. Analysts cited safe haven demand following the US action in Venezuela and exhaustion in tax-related selling as key catalysts for Bitcoin's price rise. Data from Deribit shows renewed trader demand for bullish option bets, predominantly the $100,000 strike call. We noticed ETF inflows on January 2nd after consecutive outflows during December and 3,000x lots of January's end BTC calls going through on the last day of December, Laser Digital told CoinDesk in an email. Over the weekend, the US attacked Venezuela and captured President Nicolas Maduro. Since then, crypto social media has lit up with speculation that Venezuela may be controlling a substantial shadow BTC reserve, possible as large as that of Bitcoin Treasury Company strategy, which holds BTC worth over $62 billion. These claims remain unverified. So this is definitely an unsubstantiated claim, but it's still a pretty fun rumor. If true, however, the US might seize those coins and add them to its strategic BTC reserve. The prospect of the US adding any seized BTC to its own strategic reserve reduces the likelihood of forced selling and underscores BTC's rising strategic importance as nations compete to accumulate. This other part I definitely believe, however. The other trending narrative is that President Donald Trump could soon tap into Venezuela's 300 billion barrels of oil reserves, boosting supply. This in turn could crash oil prices, allowing the Federal Reserve to cut interest rates more rapidly due to the decrease in inflation. So this is definitely a very controversial topic. The fact that Maduro was toppled is obviously very good news. He crashed the economy of Venezuela by more than 80%. He rigged multiple elections. He was a brutal dictator who oppressed his people for decades. And people are rightly rejoicing. So both people on the left and right agree that he was a piece of crap and he was not a legitimate leader. Therefore, the only point of contention is how and why this was done. So some people argue that by Trump launching military action against another country without the approval of Congress just means that Trump himself has become a dictator. However, people on the other side of the argument say that what's the point of being the world hegemon if you can't just kidnap the leader of another country and in a couple of hours' time parade him on the streets like Caesar did to Vercingetorix. One thing's for sure, however, the farce of the global rules-based order is over. What about the why part of the equation? Well, this chart says it all. If the US could actually incorporate Venezuela's 303 billion barrels of oil into their own reserves, then the United States and their allies would actually control half of the world's oil supply. So the reality is that this wasn't about saving democracy in Venezuela, it was just about gaining control over very important resources, because there are plenty of other dictatorships out there in the world and Trump is doing nothing about those. So the question is whether this will actually be beneficial to Venezuelans as well. So for example, there are two winners of the previous elections in Venezuela, but Trump doesn't want to appoint those leaders because he wants to have full control over the government. That's my main issue with this. But hopefully they will at least be able to strike some sort of deal and Venezuela could actually start rebuilding their economy. I just hope that Venezuelans will have some say in their own country's future. Alright, enough rambling, and let's get back to the charts now. And when looking at the M2 money supply, you can see that it's still putting in new highs here. A high after another high after another high. It's still a clear uptrend over here. And Bitcoin might finally start to follow it over here. The S&P is still very bullish, indicating that we're still in a risk-on environment. And it's the same case for precious metals. It's crazy to think that gold doubled in a year and silver tripled. So these parts of my portfolio have had the most growth in the past year, despite the fact that I've been adding a lot of Bitcoin. When looking at Bitcoin valued in gold, we can see that we're still below the 200-week moving average over here, but we are seeing the first signs of a rally. We just have to hope that it'll look more like this scenario over here, where we stayed below the 200-week moving average for a very short period of time, and less like this scenario over here, where we actually stayed below it for a long period of time. Bitcoin dominance is still consolidating, as you can see, so there's no clear picture here yet. ETH BTC is still holding the line as well, and there hasn't been any clear breakdown. When looking at Google Trends, you can see that interest in crypto has dropped a lot as well, which is pretty worrying. This is typically what we see in bear markets. At the same time, it could be a contrarian indicator, at least in the short term. When looking at the crypto fear and greed index, you can see that Bitcoin has reset a lot over here, which is a little bit worrying. We don't want to get too over exuberant here because Bitcoin has barely moved. But at the same time, if we're gonna be heading into a continuation of the bull market, which is still theoretically possible, obviously then we'll still need to go to those higher greed levels. Alright, let's finish things up by going back to the Bitcoin charts, and let's look at some moving averages over here. Clearly the two main moving averages to take out would be the 100 and 200 day moving averages over here. We really need to go above them and reclaim them as support to have any chance of reversing the trend over here. As of right now, the trend is still strong. We have a lot of green candles over here, and we got well above the 50-day moving average, which is at least a good start. The trend of higher highs and higher lows is still intact, but it was also intact over here. So this is the scenario we need to avoid. The overall picture hasn't really changed, and neither has my opinion. This zone here is where we will get our moment of truth. Will Bitcoin actually manage to break this short-term downtrend over here, or will we just create some sort of dead cat bounce? As of right now, we just have to be a little bit more patient. This is Saverio speaking, and as always, thanks for watching.